Hey everybody, welcome to Chapter 7 Problem Assignment. Here we got 12 questions to answer, so we're going to go ahead and go into here. Pretty confident I got about 8 or 7 multiple guess questions. In this chapter, I would really want to make sure you know the multiple choice questions, all right? Now that I'm in the homework assignment, I could probably speak a little more freely. Um, Bottom line is that I don't dig this chapter at all. So I don't. I just need you guys to know how these sales journals and stuff work. But I'm not even going to give you this on the exam. I'm going to just give you multiple choice questions from the exam. But you do need to do this. You need to know how these work. So we're going to go through these, and I'm going to go through every single one of them because I don't want you guys to spend too much time worrying about these. Just kind of go through the motions on these ones. And I don't tell you that much about accounting, but just go through the motions on these, get them figured out, get them submitted. Okay. Chapter 7 is just it's out of place. We touch on this, and then we go away from it, and we don't touch on it again for the rest of the book. So I don't like this chapter. In fact, if I could not teach a concept or something from this course, this is part of the course, and I have to teach it. If there was one thing I couldn't or did I could omit, it would be this chapter because this chapter is just I don't like it. All right, so we're dealing with sales journals on this first one, number 8. So we're going to be focusing on any of these transactions that deal with us selling something on credit. It doesn't matter if it's cash. See, this one says this first one sold merchandise costing $320 to this place on for cash. Don't care. Moving on. Purchased 2,000 of merchandise on credit. Don't care. Moving on. Sold merchandise costing that much. Okay, terms, credit terms. This is a credit sale. So our first transaction we're going to record is May 7th. May 7th. Let me go ahead and just scroll this back up to May 7th. Boom. Sold merchandise costing. Okay, account debited. Which account are we going to debit? J. Dryer. Invoice number. This is one of those ones. It's kind of like, whoop-de-doo, but we want to make sure we do it. Accounts receivable debit and sales credit. We want this for the amount we sold it for. And then the cost of goods sold is what the amount was worth. That's it, guys. That's all we do with these things. Some of these ones can be bigger, but for the most part, that's what we're dealing with on these. May 8th, we borrowed $8,000 cash, not a credit sale. Sold merchandise costing this much. Oh, credit terms. Boom. Okay, so we're going to do this one. So this one is May 12th. Sold merchandise. Okay, so this one's going to our lamb. Lamb. Get to the lamb. Sorry. It's actually an inside joke. I won't tell it to you. Okay, D705. All right, so there was this high school teacher, I think of mine, her name was Lamb, and we all made fun of her. I feel bad because she was a great teacher in hindsight. You're a kid. Accounts receivable debit, we're going to do that for $346 because that's how much we sold it for, and then we want to do the cost of our inventory. That is not a high margin there. It's less than 150 bucks. Anyway. May 16th, received that much cash from Jay Dyer. Don't care. That's cash receipts, not a credit sale. Sold used equipment for $900 cash. Nope, it's cash. Sold merchandise costing blah, blah, blah. Oh, credit terms. Boom. All right, we'll do this one. May 25th. May 25th. Sold merchandise cost to T. Taylor. You can type it into. Invoice number was 5706. Accounts receivable is 581, 370. Let's check and see if we're done. Woohoo! Okay. See, so on these ones, before we had a whole bunch of extra lines, and we didn't need to fill them. Now, look, we only had 6 lines, but we had what is that? 3, 6, 7, 8 transactions, and we still didn't fill them. All right. Don't worry about filling these up. The college it is set up to where you have to manifest and demonstrate that you know this stuff. So they'll give you more lines than you need a lot of the times. It's just one of those things, all right? Okay, next question. That was the sales. So guess what? Now, what are we going to use? The cash receipts journal. All right, let's look at the cash receipts journal. Company purchased 3,000 of merchandise credit terms. No, we didn't receive any cash. Sold merchandise costing on credit if they pay by the end of the month. Don't care. Didn't get it. Okay, because we're not getting cash. Company borrowed 2,000. Okay, boom. There we go. That's one we're going to deal with here. Let's go ahead and do this one's November 9th. The account that we're crediting is going to be to an accounts payable, and it will be to the bank. Or notes payable. Fine, notes payable. Debit cash by 2,775. Sales discount, no. Accounts receivable, no. Sales, no. Other accounts credited, you bet. 2,775. It's because it's going to notes payable. Okay. Jay Ali, the owner, contributed that cash. You bet we're putting that in here. November 9th. 13th, excuse me. Account credited. It's probably gonna be J Owner Capital. There it is. J Ali Capital, sorry. 4075. 4075. Okay, because none of these deal with a sale or something that we're owed. The company sold merchandise costing that much for cash. All right, sweet. We can do this one too. November 18. Company sold merchandise costing. Okay. Account credited is going to be sales for, yeah, sales. The 18th. Come on, Brian, stop just speak. 247. Accounts receivable credit, no. Sales credit, yeah, 247. And then 139. I feel pretty comfortable with that. Let me check it out. Let's see if I got them all right. All right, good. See, some of these are kind of wonky, and that's why you just kind of just walk through it. What is a normal journal entry going to look like? Oh, we're going to debit cash, we're going to credit sales, and then we're going to debit our cost of goods sold and credit our inventory. So just walk it through in your mind. November 22nd, the company paid. I don't need to read the mess. We paid. That's a cash disbursement, not a receipt. So we're past that. And then I'm going to look at the bottom. Company paid. So we don't need that one too. Last one we got then is November 27th, where we received money. November 27. All right, now what happened? Received none cash. November 7th purchase. So we're getting account credit is going to be accounts receivable. Oh, JFan will be credited. That's the subsidiary. We're receiving $938 cash. Remember, what is the journal entry? It's November 27th, and they had terms of when did they buy it? November 7th purchase? If paid by the end of the month. Okay, so they're paying by the end of the month. So they're getting a $19 sales discount. So we're going to debit that sales discount of $19. They owed us $871. No, that was, I'm sorry, $957. So let's just bring up our calculator really quick. And let's just verify that that matches how much they owed us. 938 plus 19, 957. Great. So what we're going to do is we are going to credit the accounts receivable account for the 957 they owed us. And that should complete this problem. There it is. All righty. On with the next one. So let's think about this. We've done the sales journal, the cash receipts journal. I wonder what the next one's going to be. Oh, it's the purchases journal. Hey, what a crazy coincidence. So you can see this one's kind of a little bit more involved. Don't let that phase you. All we're doing is anything we're purchasing on credit. First one, July 1st, looks like we do have a credit term, so we're going to, and we purchase. So let's go July 1. The account is going to be Hector Company. I had a student named Hector. Every time I had him come in, I would say, Hector. Okay, it says date of the invoice. So my guess is that the date of the invoice is going to be the same date as the month. So, oh, we're going to go 7/1, fine. Terms are net 15. Accounts payable credit. All right, we're going to go 24,000 there. And we are debiting inventory 24,000. And that's it. July 4th, we sold merchandise. Don't care. July 8th, purchased on credit. Okay, that's what we want to do then. July 8th. And then this is Zhang Company. Our date is the 8th. Oh, 08. Okay. And our terms are net 30. So $800. Ooh, boy, we're high rollers here. Office supplies. So accounts payable is going to be $800, but office supplies now is going to be debited, not inventory. Let me scroll down a bit. Okay, July 15th, we paid Hector $24,000 cash. That's cash disbursements. It's not a purchases journal. Purchase store supplies on credit. I wonder if they're going to want store supplies different. Probably will. All right, so let's do that one. July 21st. And this is oh, Staples must have got in good with the company that made the book. 21. Terms were net 30. Okay, accounts payable is going to be 1,170. Debit to inventory is no. See, I'm not sure because it says store supplies. It's not office supplies. I'm going to put this under other, and I'm going to see if that's what they wanted. That's what they wanted. That's one of those ones that if you had done that, like put it under office supplies, as long as it wasn't under inventory and you were clearly showing that you were going to use it, not sell it, I probably wouldn't have been too harsh on grading you in that regard, but they wanted under other. Okay, let's look at July 23rd. We bought it for cash, so we're not dealing with that one. We're not doing paid the employees in cash, but we are going to do the July 25th. That's the last one. July 25th. We purchased from Alfredo. I like chicken Alfredo. July 25th. Terms net 30. All right, what did we buy? We bought merchandise. Okay, so we're going to put that under accounts payable and inventory. That should be it. Very good. On we go. If we've done all the other ones except for cash disbursements, my guess is we're going to do the cash disbursements or payments journal. Purchase merchandise on credit. Don't care. Issued check number to by source supplies. If we issue a check number, we're definitely recording it. That is the same as cash in our book. Check number 210 to Kit Corporation. Count debited is going to be store supplies. Crediting cash for $320. All right, April 12th, we sold merchandise on credit, don't care. Issued check, April 17th. Check number 211. And don't get hung up on just the check numbers, is all you got. I mean, I think that's all we're going to be doing here, but all because it doesn't have a check number doesn't mean it's going to be not a cash disbursement. But if you are running your own business and you have employees that need to make purchases and you give them cash, uh, I don't want to insult anybody, so I won't call you a fool. But you'd be kidding yourself if you don't think those employees are trying to figure a way out to get that money and make it to where they can skim some of that from you. Okay, so don't ever let them have cash. Give them checks, pre-numbered checks. I don't know that any non-pre-numbered checks even exist anymore, but anyway, I was also a fraud investigator, remember, and so I think about those things. There was this lady that used checks and stole over $1.8 million doing a check scheme, and so it is possible to do checks too. So make sure you're also reconciling, making sure the money's being spent appropriately. All right, on that note, let's go. We're going to Citibank, and it is going to be to pay off a note payable. So we are going to debit the note payable. That's a liability. Its normal balance is a credit, so we're going to debit that, and it's going to be for 1,500. And we are going to credit cash and debit accounts notes payable. I'm going to just check my work real quick and make sure I'm not. So I think we're right, but I don't know if they want us to put it over here. I think they might. We'll find out at the end. I'll look and see. April 20th, purchase merchandise on credit, so we don't deal with that. April 28th, issuing a check. So let's do April 28th. 212 to Light Company for account debited. Accounts payable. Yeah, it should be accounts payable. Why isn't there any accounts payable in here? Huh. All right, give me a second. I'll figure it out. Um, okay, so it was on April 20th. We got 2,600. Oops. 2,600. 2,600 minus the amount of our 52 discount. So 2,548 is what we're 2,548. And then we're going to, I guess, sales discounts, what we're going to put here. I mean, purchases discounts. No, it would be to, what am I thinking, guys? I'm already totally botching it. It's going to be to inventory for the amount of the discount. I don't know what I was thinking. Let's just put inventory here and see if that loads. My guess is that we needed to put this in these accounts payable debit or other account debit. I mean, so let's do that. Let's check my work and see if that made it an error. Okay, but inventory was wrong. Um, okay, so account debited is accounts payable. I thought I was looking for accounts payable, didn't I? Maybe it's just light. Let's try light. There it is. Okay. And we did need to put those numbers in there. All right. Sorry. Sometimes it's hard for me to figure out what they want too sometimes. Um, because sometimes when you just put these numbers in like this and you've account debited it here, it's already knows it's going to put it in there anyways. It's just a different kind of systems. You'll learn as an accountant that as you prepare and work in the field, that this is exactly what you have to do is you just sometimes have to sit down and play with it and figure out what it's doing and how it works. And that's what I've done all my life. I've never taken one class on how to learn how to do any kind of program, but I know well, Quicken, I know QuickBooks and JD Edwards, and it's only because I sat down and just played with it and learned it. So, am I an expert and know every single detail about them? No, probably not. Would a class benefit me? Absolutely. Do I recommend you guys taking those types of classes? You bet. Um, but I'm the type of person that learns hands-on. So, for those of you people that are like, on this, if you're an online class watching this video, God bless you. I couldn't do that. I need someone to kind of sit down and kind of show me a little bit at first to get me started, and then I can run off. But I can't do it by myself, or I can't just learn from a book. I got to be able to play with it. We're doing the April 30th transaction. April 29th, we paid salary. Oh, see, they snuck that past me. Look at that, April 29th. They snuck April 29th past me. When I saw that check number missing, I was like, wait, what's going on? So our payee is going to be to B Doc. Account debited is going to be salary expense. 950 bucks. 950. So you got to watch it. See, all those other ones said issued check, and then they snuck that in there with the issued check number at the end of it. Just watch your check numbers, and if I even put the wrong one in there. Look at that. And I wanted 215, 214. So watch that. Yeah, and this one is Seth Incorporated. I like Brian Incorporated. That'd be pretty cool, huh? Count debited on this one's going to be for the April 3rd purchase. So that means we're going to be debiting Seth again for $2,000. Let's just check that transaction on April 3rd. 2,000, two terms, 210 at 30. We clearly didn't get it within those terms, so we're paying it at the end of the month. So I think we're going to be done and completed here. Looks like we are. Okay, good deal. Done with the cash payments or disbursements. This last one here is for the general journal now, okay? So we have the general journal and a subsidiary ledger. So these are the ones we're going to put in here as journal entries. Company purchased merchandise on credit. No. Sold $750 merchandise for cash. No. Owner contributed equipment. There we go. So here we're going to put no journal entry. We're not recorded in general journal. Sold merchandise, not recorded. Okay, this one we're going to do this. So we're debiting equipment for 5,600, and then A Smith Capital for 5,600. Company sold $900 in credit, not recorded in general journal. Company sold merchandise, not recorded in general journal. Company granted J. Bell an allowance for $560 merchandise, which I auto credited accounts receivable for that amount. Okay, so we are going to debit sales, returns, and allowances for $560, and we're going to credit Smith. No, J. Bell. Sorry, accounts receivable J. Bell for $560. And then the company purchased a building for $26,000 by issuing a note payable. Yeah. Building 26,000, note payable. Notes payable. And then the last one, company paid salaries. No, not any journal. Okay. Let's check this so far. July 9th. We'll check it out. Company sold $900 of used equipment to on credit. Okay. I did miss that. Company sold. I thought sold and just skipped it, so that was my fault. Company sold $900 of used equipment on credit to junkyard. So our general, all right. So our journal entry is going to be accounts receivable, junkyard, for $900. We're going to credit equipment. 900. All right, let's check it now. All right, there we go. All right, now let's go to the second part of this. Subsidiary ledger. Identify the journal where which each of the following transactions should be recorded. All right, so it's basically the same transactions. Now you're just identifying, hey, which one should have gone in. Company purchased $3,400 on credit. Okay, if it's purchased on credit, it's a purchases journal. If we sold for cash, it's the cash receipts journal. We know this one goes to the general journal. We know this one goes to the general journal because we just did those. Company sold sales journal because it's on credit. Company granted J. Bell allowance. Okay, that's general journal. Company purchased a building, issuing a note, general journal. And the last one, the company paid salaries of $4,700 with cash, cash payments journal. All right, let's check our work. We should be good to go and should be done. Indeed, we are. All right. So we're good to go, guys. That's your homework. I hope that helped. You guys have a good one, and we will see you guys in the next videos.